Hey guys, so in today's video, I'm going to be teaching you a super simple ICT Forex trading strategy that ICT has said 95% of the traders that he teaches actually use. So in this video, we're going to go over order blocks, fair value gaps, liquidity sweeps, market structure shift. We're going to go over everything on how you are going to find A+ setups. So I really need you to watch this video all the way until the end so that you can get an understanding of how to do that. So without further ado, let's jump straight into this video. So this strategy is pretty simple. There are a few components that you need to be aware of. So let me give you an example of exactly what. So first and foremost, we're going to have to understand where we are in terms of our higher time frame structure. So let's just say that we are in a bullish structure, right? We then have to understand where we are in terms of our expectational order flow. So if expectational order flow tells us that after a higher low, we get a higher high, then it also tells us that after a higher high, we get a higher low and then a continuation higher. So once we understand where we are in terms of our expectational order flow, what we can start to do is identify key areas of price within this leg up that we can potentially get that retracement to. So now that we know that we are expecting a higher low, where is that higher low going to form? Is it going to form in this fair value gap? Is it going to form in an order block? Is it going to form in this liquidity sweep? We don't know, but what we do is we identify order blocks and fair value gaps within this leg of price, and then we wait. So let's say that we have this order block right here. We then wait for price to come and tap into this order block. And once it does, we then drop down to the lower time frames. For me, that is the 5 minute. And then on the 5 minute, what we're going to do is wait for price to give us our entry confirmation. So whether that be confirmation model number 1, 2, 3, whichever one it is that you choose to go with, you're going to use that entry model, wait for that accumulation, manipulation, distribution, identify the same fractal nature on the lower time frame, such as the fair value gap that caused the market structure shift. You're then going to take your entry on that fair value gap, and then you're going to target the most recent local high. So it's pretty simple. You just have to understand things such as how to identify order blocks, fair value gaps, understand where you are in terms of your multi-time frame structure and your expectational order flow. If this is something that you guys are not fully aware of, and if this is something that you guys are struggling with, then I would highly recommend joining the VIP group, and the link for this is down in the description. And as you can see, I cover all of the different topics such as market structure, liquidity, fair value gaps, order blocks, order flow, market structure shift, entry schematics, you name it, all of the trade examples, even psychology. I cover everything inside of my VIP course. So I'll leave the link for this down in the description if this is something that you guys want to learn a little bit more on. Apart from that, this is exactly what we're going to be looking for. So let me give you a real life example. So this strategy works well on crypto, Forex, indices. It's a universal trading strategy, so it works on near enough every single instrument. Now it's your job to backtest it to figure out which instrument works best for you. So let's jump straight into this first trade example, which is going to be on Bitcoin. So first and foremost, we have to understand where we are in terms of our higher time frame bias. Now, as we can see, Bitcoin has been a massive pump for a long time. Now we've just hit over 100K, which is really good to see. So of course, we are in a heavily bullish trend. Therefore, we are going to be looking for buys. We're going to be biasing the buy side. So as we come on down to the hourly, what we're going to do is replay the chart so that we can understand what's actually going on. Now, first and foremost, as we've just understood, we are very heavily bullish. Previously, we were bearish, putting in a series of lower lows, lower highs, lower lows, lower high, lower low. And then we had a market structure shift where price has now shifted to the upside. So now that we've got a bias of price being bullish, we're going to identify key areas in the market that price can potentially retrace back into. So understanding order flow, we know that after we get a higher high, we're expecting a higher low and then a continuation higher, right? Therefore, we can identify key areas such as fair value gaps, order blocks, and all of the above to see that these are areas that price can potentially retrace back into. So today I had this fair value gap identified, and I knew that if price was to retrace back into this fair value gap, not only would that give us a higher low on the higher time frame, but from this area we can get the catalyst for price to go higher. Of course, we are overall bullish on the higher time frame, so having that understanding gives me more peace of mind knowing that if price does retrace, I can safely look for my entry criteria. So now we can also see that there is liquidity being built up just above this fair value gap. So now if we play price on, we can see that eventually price does sweep all of that liquidity and tap straight into that fair value gap. Now go down to the 5 minute, and now on the 5 minute, we're going to start looking for our entry criteria. Now I have 3 different entry models. I'm not going to teach you all 3 of them. They are taught inside of my full trading course. For the sake of this video, we're just simply going to play price on and wait for a market structure shift. So now first we've got a tap into this fair value gap. However, our entire leg of price is right here. So because of that, we're not yet entering this trade. We're waiting for price to give us a lower low. And as we can see, if I continue to play price on, after a while, it does eventually come down and give us this lower low. So now we've had a lower low, lower high, and now a lower low. Therefore, our key areas of structure is right here. And we need this lower high to break in order to signify that price is going to be going bullish. So we wait, we still don't enter a trade, and eventually after a while, price will then come all the way back up and give us that market structure shift. So not yet. We're still playing price on, we're still sitting on our hands, we're still waiting around, and eventually we get this market structure shift. So now this has signified that price has gone from bearish, giving us lower lows, lower highs, lower lows, to now putting in a higher high. So once we've got a higher high and we've flipped bullish on the lower time frames, we can use the same fractal nature that we saw on the higher time frames and put that down into the lower time frame. So we're going to identify the fair value gap which caused that market structure shift. And what we're going to do is take our entry at the open of that fair value gap. We're going to put our stops just below the low. I like to cover the most prominent low. And then after that, I'm targeting a 1 to 2. However, if you do catch the beginning of an entire leg up, you can actually catch the entire wave, right? However, for the sake of this video, we're going to go for a 1 to 2, which is what I took on today's trade that I took on Bitcoin. And if I play price on, we can see that price retraces, taps us into that fair value gap, and then it slowly goes to take profit. Now here is real price at the moment, so we can see that we've just closed out this position, and I closed it out for a nice 1 to 2 risk to reward. So it's nice and simple. We're identifying key areas of interest on the higher time frame after we've understood our higher time frame bias. Then once price taps into our key areas of interest, we're then dropping down to the lower time frames, looking for our entry criteria and taking the trade. It's as simple as that, right? So let me give you another example on US 30. So first and foremost, we have to understand where we are in terms of our higher time frame bias. So as we can see on the 4 hourly, we are heavily bullish because we've been putting in a series of higher lows, higher high, higher low, higher high. So our anticipation is that we put in a higher low and then a continuation higher, right? So with that anticipation in mind, we know that the higher time frame is bullish. However, we can play both sides of the market as long as we understand multi-time frame structure. So taking a look at this entire leg of price right here, even though the higher time frame is bullish, this entire leg has been bearish. So since we understand that we are technically in a bearish trend coming down, we can also look for trades in the opposing direction, so counter trend, as long as, like I said, we understand multi-time frame structure. So as we can see on the 4 hourly, we're creating a series of lower lows, lower highs, lower lows, lower highs, lower low. Therefore, we can identify key areas of interest within the market, such as this fair value gap. And when price does eventually go and tap into it, what we can do is drop down to the lower time frames. And if I replay price, this is a trade that I took today on my Top Step account, and I'm going to put a screenshot on the screen right here so that you can see that the trade did close out for $2,600 in profit. So we've now identified our higher time frame area of interest, which is this 4 hourly fair value gap. Price is now tapped into it, we've dropped down to the lower time frame, and now we're simply going to be looking for our entry criteria. So as we can see, we get a nice accumulation, manipulation, and a distribution to the downside, which is right here. After that, I waited for a confirmation entry, and as we can see, we get a breaker structure right there. And once I saw that my confirmation entry was ready, I then identified the order block which gave us that confirmation, and then from there I put my stops just above that high, and I was actually targeting a 1 hourly order block, which is just right here. So if I go back down to the 5 minute and I play price on, we can see that I get tapped in right there. Price then runs straight to my take profit, and look how clean that take profit was. This is why you have to understand where to take profit as well, because as soon as we hit that 1 hourly order block, price then decides to go straight back the opposite way. So you have to understand not only when to enter, but also when to exit, and those are equally as important. And as I said, I got out of my position right here at this 1 hourly order block. So again, just to reiterate everything that I've said in this video. So on the higher time frames, on the 4 hourly, yes, we are bullish on the daily time frame. However, on the 4 hourly, we can see that right here, we had this fair value gap and we have this bearish price action. So then we identified this bearish price action and this bearish fair value gap. We waited for price to come and tap into that fair value gap. We then drop down to the lower time frames, wait for one of our entry criteria to start playing out. Once it does, we then take our entry, stops above the high, and we target the next leg of price. Simple as that. So that pretty much wraps up this video. You can trade it on crypto, Forex, indices, whatever it is that you choose to trade it on. I highly recommend that you do backtest this for yourself though, to figure out which instrument works best for you. If you did enjoy this video and get some knowledge, then please don't forget to leave a like, comment and subscribe. But on that note, I'll catch you guys in the next video.